Welcome to the Retirement Made Easy podcast. I'm your host, Greg Gonzalez. My goal for the podcast is to help you live a better life in retirement by giving you the tools and information you need in a language that you can understand. As a financial advisor in St. Louis, Missouri, I have clients that are pre-retirees as well as retirees that are living the good life, so to speak, clients in 17 different states. So I have the good fortune of having conversations with folks and hearing their deepest financial worries and fears, goals, and concerns. And quite regularly, clients will bring up comments or stories that they've heard from either their brother-in-law, maybe it's somebody at work, maybe it's somebody at church, and oftentimes this person will share what they think is the magic bullet. Right? Maybe it's gold, maybe it's Bitcoin or some special investment like an annuity or Lord knows a whole life policy. But a lot of times people, and maybe it's just their personality, but they think everybody should hear that this stock tip or this investment is the holy grail and everybody else should follow their advice. And it could be as simple as somebody's brother-in-law was recommending that they invest in a marijuana company stock, right? That is kind of a popular trend lately. So on today's episode, I wanted to dive a little deeper and hopefully help all the listeners out there understand that there's no magic bullet, but how might you consider investing and what really makes sense based on all the information that's out there? What is the prudent way to invest long-term dollars that you have saved for your retirement, your serious money that needs to be there for the next 30, 40 years? So we're going to talk about that on today's episode. Before we get into today's content, I wanted to remind listeners to check out our website, and that website is retirementmadeeasypodcast.com. That's retirementmadeeasypodcast.com. While you're there, you can listen to past episodes. You can send me your questions at the bottom of the website. I'd be happy to get back with you and share my opinion or advice that on any question that might be on your mind. And while you're also there, there's a couple free resources such as my retirement secret sauce. That's probably the best resource you can get your hands on for those people that are a couple years away from retirement or already retired. Excellent resource. And then as you're doing your taxes this year, our 2020 tax planning guide, you can check that out there right on the website. Our 2021 tax planning guide will be out shortly, probably later on this spring. So do check back in for that. So today's episode, my goal will be to teach you that there is no magic bullet to retirement planning. You may listen to a radio show and there is some financial consultant who tells you that they know of the magic bullet for retirement and it's this product, this annuity or whatever it might be, this investment product. I can tell you it doesn't exist. And you don't want to put all your eggs into one basket, whether it be an investment product like an annuity or a single stock or something crazy like that. But very frequently, I have clients that mention to me that they had a brother-in-law or someone from work that said, hey, you should be investing in XYZ, whether it's a stock, whether it's a marijuana stock, mutual fund, whether it's Bitcoin, some annuity or real estate, or venture capital. I hear all kinds of stuff from clients, some very off-the-wall ideas out there. And the vast majority of these different ideas, or call them investments, a lot of times they're speculative investments at best, but I owe it to all of our clients that we work with to check out these different investment ideas and then report back to them. I have to do my due diligence. And then it's my job to share, based on my due diligence, my honest opinion of whatever it might be. But what I want to remind people is you've got to separate your serious money that is earmarked for your retirement. This is money that you should invest prudently and wisely, because if you make a mistake and you put it in some kind of junk and it's not there for you, you might run the chance of running out of money when you're in the middle of your retirement. And what a miserable situation that would be. So you've got to remember, hey, this is your serious money. This is money that's going to help fund your retirement for the next 20, 30, 40 years, depending on your age. So do you really want to put your money on red or black? On some kind of speculative investment that you may lose everything? That's something you and your financial advisor are going to have to decide. But I want to point out something to you. I want to point out a study, the largest study of millionaires that's ever been done in the United States. It was completed in 2017 by Dave Ramsey, Chris Hogan, and their team at Ramsey Solutions. They interviewed, surveyed over 10,000 different millionaires from across the country. And they asked them everything from their upbringing to their career, their education, and even their investments, how they did their serious investing. And what they found was over 80% of people, the greatest wealth building investment vehicle for over 80% of these millionaires that they surveyed and interviewed, it was their 401k or employer-sponsored retirement plan, be that a 457 plan, 403b, like I mentioned, 401k, and they even grouped in Roth IRAs to that category. So that was how they did it. That was the largest percentage. Over 80% of these millionaires built their wealth through this retirement savings vehicle they had through work. Wow. And you might find this interesting. Number two, 74% of the millionaires that were surveyed invested outside of work into IRAs, mutual funds, ETFs, and stocks. And I know you're not going to be surprised when I tell you this, but gold and silver and real estate was very far down on the list. Investing in lottery tickets wasn't even on the list of things that millionaires did. But let's go back to the number one wealth building vehicle, which was an employer-sponsored retirement plan. Most common, you hear a 401k, 403b, something like that. So I have to admit to listeners out there that I have reviewed the investment choices for literally hundreds of different 401ks, because each and every 401k plan through your employer is going to have different investment options. And typically there's a list of anywhere from 20 to 40 different choices that you'll have to choose from. And going through literally hundreds of different 401k investment options, I'm seeing what's available for these people, this 80% of millionaires in this study, to invest in. So let's talk about that. We know that over 80% of people, the most important wealth building vehicle was your 401k or employer retirement plan. Okay, so we've got that. Let's take it one step further. What is available to invest in within that 401k? Drum roll, please. It's mutual funds. It's mutual funds that are available in 401ks. Every now and then, I'll see a company that has a company stock where you can, assuming they're publicly traded, you might be able to invest in your company's stock. But other than that, every single 401k I've ever seen in my entire life only allows mutual funds to be invested in, other than company stock here and there. So right there, you have the recipe. You've got the ingredients. The millionaires in this study are using their company's 401k plan or retirement savings plan, whatever it might be or might look like, and they're investing in mutual funds because that's all the 401k allows them to invest in. I've never seen a 401k that allows you to invest in Bitcoin and gold and silver and all this crazy stuff. I take that back. I have seen some that allow you to be self-directed, maybe at Fidelity or Schwab, somewhere like that. But those are very few and far between. I would say that if I had to guess, I would say that 95% of 401ks that I've seen only allow you to invest in a small menu of mutual funds. Some are very conservative mutual funds like money market funds or short-term bond funds, and some are very aggressive that might be in stock mutual funds and everywhere in between. But these people are building their wealth in a company-sponsored retirement plan like a 401k, and they're investing in mutual funds. That's the recipe. So you know how the millionaires in this country, if this study done by Dave Ramsey Solutions is any evidence of how self-made millionaires in this country are investing their retirement dollars, it's in their 401k in mutual funds. And by the way, you can buy a copy of that study of millionaires, the largest study that's ever been done, on DaveRamsey.com. It is an incredibly interesting study, let me tell you. But it also is precisely what I have experienced in my career. Anytime a client that I meet with that has over $1 million saved for retirement, I will always ask them, what were your best investments? How did you build your wealth? 9.9 times out of 10, they were investing in growth stock mutual funds within their 401k or company retirement plan. That's how they did it. They were consistent and they made saving and investing for retirement a habit with discipline and hard work. I have never had a client that has told me about some magic bullet, whether it be an investment product like an annuity or something else, that they have attributed to being the biggest factor of their wealth building over the years. I want to share my opinion on this. I sincerely hope that 401ks continue to only offer mutual funds to participants in the plan. Because when you leave it up to the individual and you give them the ability to pick their own, they're going to just naturally do things that maybe they hear a stock tip from their brother-in-law or gold and silver, Bitcoin, whatever it may be, and make poor decisions. That's just my opinion. But when you limit them to good quality, diversified mutual funds, they'll do really well over time. That's what all of the studies show us. And this study of millionaires, Dave Ramsey's largest study of millionaires that's ever been completed, shows us that, hey, that's the most popular way that people are building wealth for retirement. So if someone ever asks you, what is the secret to investing and building wealth, point them to this study. Point them to the largest study of millionaires ever done in this country, and it proves that the greatest investment vehicle the vast majority of millionaires used was their 401k through work, investing in mutual funds. It's pretty simple, but it's not easy. I'll say that once again. It's simple, but it's not easy. Investment success is dictated by your behavior. So the study went one step further in asking these millionaires, when they looked at their $1 million investment portfolio of mutual funds, and for most people it was in their 401k, they said, what do you think was the biggest contributing factor to your success? And the number one factor people mentioned was financial discipline. Number two contributing factor was investment consistency. So they had the discipline to stick with their investments, and they had the consistency to every paycheck keep contributing. Whether they were getting the match through their 401k or not, every paycheck, they were consistent with what they were putting in, paycheck to paycheck, month in, month out. And over time, they developed into habitual savers and investors in that 401k. They didn't stop. So when the market went down, they stuck with it. They didn't cash out their 401k, quit and go home, right? They stuck with it. They just put their head down and kept contributing. And I mentioned that. I had another podcast that was called Keep Long-Term Investments Long-Term, because I see this over and over again. The fatal mistake that so many people make is they don't keep their investments long enough because they don't have any patience. And how do I know this? Well, it's because I see it with people. And I also read a study that's done by Dalbar every year. They come out with a study of investors to see how long people keep mutual funds before they sell them, right? How long do people let the mutual funds grow before they get sick of them and have to replace them with something else, chasing the next best thing, so to speak? And year in and year out, this study shows that people keep mutual funds less than 3 years before they sell them and get rid of them. They don't have any patience. There is an awesome article that talks about this Dalbar study. And the name of the article is, Are Investors as Dumb as This Study Says? And basically, this Dalbar study attributes the terrible outcomes that investors have with bad behavior. They don't stick with their investments. And so this Dalbar study said that in 2018, the S&P 500 dropped 4.38%. But this Dalbar research showed that the average investor in U.S. stock mutual funds lost 9.42%. Well, how can that be the case? Well, a lot of it has to do with people don't stick with their investments. They want to get in and get out. And the problem with trying to time the market is nobody can time the market. I don't care what your brother-in-law says. With timing the market, think about it. You have to be right twice. You got to be right when you get out, and you got to be right getting back in. And nobody can be right twice. It's very, very difficult because nobody rings a bell at the top of the market and nobody rings a bell at the bottom of the market. So many people want to have their boat sit in the harbor because it's safest in the harbor. But you got to remember, that's not what the ship is built for. It's built to ride the waves. I have a lot of apple trees on our property. Whenever we plant an apple tree, it doesn't produce apples the first year. It doesn't produce apples the second year. Sometimes not even the third or fourth year. It takes sometimes 5-6 years before we start to see apples. And if I would have chopped down the apple tree in the third year, in most cases, I would have never seen the benefit of a harvest of apples. It takes patience and commitment to let the apple tree grow into something that's fruitful. Investing is a journey. It's not a sprint. It's a marathon. It takes time, but if you stick with it and don't give up, you'll be glad you did. You got to remember the outcome, the positive outcome. And as long as you have the discipline to stick with it, you'll get there. But don't be fooled for a magic bullet, whether it be some commercial or some salesman talking about an annuity or special products. Have you ever heard something like this? You can have all of the upside, but none of the downside. Nothing exists. Trust me, from a certified financial planner, nothing like that exists. If it sounds too good to be true, it normally is. And there might be so many strings attached to it that it would scare you. I hope in today's episode you have picked up on a thing or two, or maybe even learned something. I want to remind listeners, if you have any questions, go to my website, retirementmadeeasypodcast.com. I'll catch you on another episode of the Retirement Made Easy podcast. And remember, always dream big. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, please consult your attorney, tax advisor, or financial advisor prior to investing. This is a hypothetical example and is not representative of any specific investment. Your results may vary. All performance referenced is historical and is no guarantee of future results. All indices mentioned are unmanaged and may not be invested into directly. The SmartVestor program is a directory of investment professionals. Neither Dave Ramsey nor SmartVestor are affiliates of St. Louis Retirement Advisors or LPL Financial. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.